Man, oh man, how about them fireworks between J.D. Vance, Donald Trump, and Zelensky? It was pretty wild. And I think it created a great opportunity for a trade. So I'm going to talk about the trade I see and get into that in this video. It should be a pretty good video because I'll talk a little bit about the difference of what I look for in a trade versus an investment. So stick around.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Saturday. I hope you're all doing well. I actually got back a little bit early from taking my son to his snowboarding lessons. It's the last week. I kind of love seeing him get into that because I was a skier growing up, and I like going up into the mountains. You'd be surprised here in Las Vegas, we actually have Mount Charleston. It's got some snow. It's kind of cool that it's so close. Anyway, what am I looking at that I see a trade recently? Now, I don't know if you watched my video from the other day where I talked about it looked like good panic and it looked like a bottom, and I wouldn't be surprised to see the market go up a little bit, and then a lot of times it comes back down and retests the lows of the day that it made what I think is a low. And that's what I saw happen Friday morning. Bitcoin finally crapped out, which is what you look for. Um, as always, let me take care of this first. Please don't use any of the information I provide in the video as financial advice. This is just what I look for me. You need to do your own research, find what works for you, and by no means this is not financial advice. Reach out to a financial advisor if you want to look for things like that. So, what am I talking about, and why do I think the fireworks and the fight that we saw on TV, which to me was super cool to actually get to see some of that and how people reacted, but why do I think that created a trading opportunity? Well, after Bitcoin collapsed and came in, the market looked like it was going to open significantly lower and started going straight up from there. Pretty good reaction, retesting the lows that it made the other day and then going up, which is what you hope to find. Well, then the thing going on and the people started worrying about the war in Ukraine getting worse, and it really drove the markets right back down and rather quickly. And where did they stop? Right back at those lows again. And then all throughout the day, while it was in the news talking about the fight and is America going to stop supporting Ukraine? And nothing's really been decided. It kept going to those lows time and time again. Well, if somebody's weak and nervous, that's going to potentially scare them out of the market. It shakes out the rest of the sellers. I saw Amazon get back down to like 206. Google got below 170, which was a really good low. Meta got back down to, I think, around $550 a share. And MicroStrategies got pretty low as well. Well, they kept on hitting those bottoms and bouncing up a little, back down to those lows, all throughout the day while it was in the news about this terrible, exciting thing that happened in the White House and the Oval Office between these guys. And I'll admit, it was exciting. Now, what happened at the end of the day is the stocks really started going much higher. I think the sellers were shaken out. And what I mean from the difference between a trade versus an investment, in my trading account, it gives me opportunity to buy a stock like Amazon. If I'm lucky enough that I got in around 206 and $207 a share, even if it was $208, well, now I'm risking the lows that it got to during the week. So if it gets somewhere around $203 a share, well, I'll probably get out of the trade and move on. There are plenty of times that it does that and then it just goes straight back up. But sometimes that creates a bottom that it never really goes back to again, and it can really take off from there. And instead of me thinking about it being a $20,000 investment, what I start to think about is I'm risking, say, $5 a share. So, on however many shares I'm comfortable risking the $5 with, I'm able to put on a bigger position and potentially buy on margin or whatever I'm doing in a trading account that I would never do in my investment account. On the other hand, in the investment account, I want to own Amazon for the next 10 years. So I just leave it and I don't worry about the ups and downs and the inner market moves and how I think it's going to play out. I do that because I enjoy doing it. And then in the trading account, I'll put it on as a trade. I might spread it out like I did on Friday between Google and Amazon and some Meta, and I even bought Hims. I stayed away from the ones that I want to rotate into longer, like the safety or the dividend stocks, the ones that are a little less risky, because it looked like that was the rotation going on the whole week. And if I'm right on the trade, that rotation should have played itself out. You probably don't see the same movement in the things that have been not favorable for a while. They'll probably continue to stay not favorable. And I'm looking not to fight the trend. I mean, quite honestly, I'm super bullish. I heard a thing with Tom Lee where I could tell he sounded more nervous than usual, but the things are still out there that made me bullish to begin with. And the fact that people are really nervous and the commentators are talking about the tariffs and things that are going to drive the market down make me worry less. And if I'm wrong, I'm wrong. It's why I set things up differently. The other thing I do that I really wouldn't recommend others doing is I don't keep a huge safety net like people talk about for 6 months or a year. I'm comfortable that even if the market goes down, I'm in a good enough position that if I have to sell when it's at lower valuations, even where I really wouldn't want to sell, it is what it is, and I would just deal with that. On the flip side, I want as much money invested for as long as possible for the most part, because time in the market is usually more valuable than timing the market, despite that being what I'm talking about in this video. For the stuff that's set it and forget it, and why that's the majority of the investment, it really is time in the market. I'm not going to worry about trying to make 20 or $30 on Amazon. I hope to have 4x my money by the time I kind of pay attention to it again. Or really, what I hope is that my wife and son inherit it. It's enough that they're able to not stress so much about certain things. But keep in mind, I've been plugging away and putting away as much as I could since the time I was like 18, 19, 20 years old, working jobs for $5 an hour. So it takes a while and you just have to stick with it. Either way, my point is if I think my job is okay and I think I have enough coming in to be able to pay my bills and live my life, I'd rather, as much as I can, actually invest it in the market as long as I can let it be invested in the market. Because, from my perspective, if I feel like the markets are going to get on average, let's call it 10% a year, I want as much of that 10% a year as I could possibly get to really push things along quicker. If I hold out a big chunk to have a year's, living expenses on the sideline in case a bump comes around, well, that's money not earning the 10% that I'm trying to get from being invested. And that's invested in anything that I see of value, not necessarily equities, even though we're talking about equities in this video. I just want to be in the markets as long as possible with as much as I'm comfortable having in the markets. That being said, really everybody needs to do what's best for them. And if it makes you more comfortable to have that stuff on the sidelines in case work goes badly and you don't have the money coming in, by all means, it's a safer route to go. I try to keep something in case an AC breaks or something that I really don't want to go digging and have to sell something if I think it's undervalued at the time. But outside of a little bump in the road on something like that, I really try not to have too much cash around because I want to be in the markets. Now, the next question on everybody's mind, if they're trying to play along with the trade or at least watching and paying attention, is where would I be looking to get out of these things? Well, I'd be looking to get out of around the recent highs, maybe a little bit below in case they range trade for a while, but I'd also want to keep some in case they break out to the upside. And this was a good low, um, especially with how bullish I am the market. But for Amazon, for example, the recent highs I think were close to 250, maybe 245 per share. So I'd probably look to be getting out of a portion of the trade, if not a majority, around 238, 237 a share. And I'll pay attention to how I feel like the stock is acting if and when it gets to there. And with Google, where would I be looking to get out? Well, it had barely breached 200, but part of it, I really like Google. I feel like they're super undervalued. I feel like lately they've been in the news a lot for things that aren't a problem yet. You know, their search is still growing, yet it's talked about that all these other companies are going to start taking market share away from them. Where I'm not sure they're really going to take away market share. I think you're just going to have more players in the space. At the same time, YouTube to me is such a strong platform. I see them able to continue to grow YouTube immensely. And then what's interesting is even their Waymo division seems to be growing at a rapid pace. So there are lots of parts to Google away from the search engine. And I know the search engine is a major part of the company, but I like Google. Now, that being said, the highs seem to be around $200 a share. So as a trade, I would have to get out of some of the position if it starts to retest that area. And then with Meta, it seemed to get above $730 a share. So if it gets back into the $730 range, because it got above there, it really got to 740. That's probably an area to lighten up again in case they end up range trading. Um, if they end up just taking off, how lucky is that? But since they're in my set it and forget it account, I really don't want to hold the trade too long. And I bought it all in November, so it's a little heavily weighted into those things. You know, and I'd be careful for some of the people who are in ETFs. And I love ETFs, but the S&P 500 ones are really heavily weighted towards the Magnificent Seven. I think they're close to something like 30% of the value of what those funds are. So you're really heavily invested in tech and maybe you're comfortable with that. I'm not sure. Oh, and Nvidia is another one that I saw a good trade again. It traded right down to $116 a share, and it seems to be in a range between about 116, 117, all the way up to like $145 a share. So I think that's a nice one as well that creates some opportunity. And it closed on Friday, still on the lower end of its range, around $125. And I think Nvidia is a good company that, yeah, maybe it doesn't take off like a rocket ship like it was previously, but it should still do okay. Now, I can see it a little bit. Oh, I can't. My wife had me get this new fuzzy microphone. I hope you guys like it now that I show it. She says they're super in style. And since I'm such a stylish person, I figured it would make sense that I should have one. I do think it's kind of funny. I hope you guys like it. I hope the sound quality is okay. Now, I apologize to the growth of my channel that I am not doom and gloom. I know that's what gets clicks. I know that's what builds channels. Unfortunately, I'm not doom and gloom. I think that, like, when I go out, places are doing business and seem to be doing okay. I hate the inflation too. I still get sticker shock. I don't want it heard the wrong way. It's funny, the only thing that doesn't really bother me is the eggs, and maybe partially because everybody talks about them so much. But I thought eggs were super cheap before. $1 an egg, I get that it feels expensive because they used to be 10 cents, but I don't know. Go without eggs if it's so expensive. You'll survive. I'm sure that there's other things one could buy. Um, but it's the only thing that really hasn't bugged me. I remember I was walking past a pizza place the other day that had two slices and a drink for $8.99, and it wasn't all that long ago. It was like $4.95. Now, when I thought it through, it was very reasonable. But anyway, my point is, the inflation drives me nuts too. I get it, but that's a different point than the economy struggling and doing poorly. Earnings are still good, and while people are warning like about future earnings, they have all the concerns of everybody else. But that doesn't necessarily mean they're going to be bad, and nobody can really predict it. They're making their best guess to prepare people, but the fact that they're preparing people gives them a good chance to outperform what they've prepared the investors for. So let me explain that in case it was confusing. So I'm company X, whatever that company is. Make up whatever one you want in your head. And my earnings are Y. And I say, but going forward, I'm a little concerned that the economy is slowing and I expect them to be Y minus Z, whatever that is. Well, now the anticipation is it's going to be Y minus Z. So if and when my next quarter comes around, if I happen to have better earnings than Y minus Z, there's a potential that the stock goes higher, even though I've prepared, even though it's not that great compared to this quarter, because I've outperformed what I've prepared everybody for. The news that we have is already priced into the markets. So if things are correcting because of potential downturns that may come in the future, if those downturns come, it's probably already priced in. And if they don't come, well, there's good room to the upside. And it seems like a lot of companies are preparing us for a slowdown that may not come. We don't know how the tariffs are going to work and what they will do, or even how big they will be. We don't know what'll happen if we stop providing to the Ukraine, if the war escalates, if it ends. Like, there is no way to really know, and we can all make the same guesses, and it can make the stock market pull back. But to me, that's a discount. That means that it's selling for a lower valuation on a guess about future events that even the professionals have no better insight of you or me or anybody else. They might have better connections of people who are smart that they can talk to get an idea of what they think will happen. But the guy who runs the Magellan Fund, if that exists anymore, I apologize if it doesn't, like, I don't really see him having a better indication of what will happen if these things happen than you or I. And overselling the stocks in expert anticipation, maybe it happens, but now they're already sold off. And what I like is all the scared money and money on the sidelines waiting for a big correction. If that money keeps sitting and waiting because everybody's so scared that this correction's going to come, I think the markets keep going higher. When the time that the markets finally take off to the upside, including housing, including Bitcoin, including equities, when all that stuff really goes off up and everybody starts saying, geez, I can't fight it anymore. I guess it's just going to keep going higher. That's when I think it's gone too far. But I don't hear people saying, geez, I can't even fight this. I give up. I'm going to get in because I don't want to miss it. I think they're a little bit nervous still. What do you guys think? Let me know in the comments. Also, did you buy anything this week? Were there things that you saw opportunity as a trade on, or did you see opportunity as investment, or do you just automatically put your money in every month or every week or however you do it? I'm curious to know. Do me a favor if you haven't already, hit that subscribe button, smash the like button. If you've made it this far, say happy birthday in the comments. Today's my birthday. It'd be kind of cool. It also will let me know who listened through, and I'd be kind of flattered. Anyway, have a good day, a good week, whatever, and I'll talk to you guys soon.